call this meeting to order from the July 11th, 2023 Finance and Budget Committee meeting.
Councilmember Kelly?
Here.
Councilmember Nguyen? Councilmember Nusma?
Here.
Chair Livingston?
Here.
Committee Member Rikus?
Here.
Committee Member McMillan?
Here.
She's online. Okay.
Council Member Reed?
Here.
Here, online. Okay. Very good. So we have a quorum? Okay, very good. We will go immediately to public comment.
Good evening. My name is Jack Martell. I'm a 7-decade resident of Evanston, homeowner since the 70s, retired captain of the Evanston Fire Department, and I'm an elected member of the Fire Pension Board. I appreciate the opportunity to address you tonight. I sent you a lot of material, and I'm not sure if you had a chance to get to it. I thought that some of it could help the process tonight for point of reference. I sent a 4-year look at the growth of the unfunded actuarial accrued liability, and in the last 4 years, it's grown by 18 million. We don't have 2022 yet. We will have that certainly by early fall. I also included, we kick around 6.25 and 6.5, and there's a cost difference there, and I said, well, you know what, I'm going to actually look at what that is. So I sent you the sheet of the Foster and Foster. The numbers on the bottom in red are mine. You can double check those, but I think we could just easily say that's like 1.5 million for a quick figure on that. And then I also included the budget savings that in the last 3 years, that's somewhere here. And I believe that's somewhere over $120 million in surplus. And all these documents, it's just not me putting them on, I put the actual documents that they come from the city and from the state. And I'm going to focus on just one thing right now, and that's the PPRT, because I think that's a key to this whole thing, making it work without much pain, and certainly not much pain to the taxpayers. And they have the benefit of reduced taxes in the future and the benefit of improved or certainly bolstered when we fund things, that it certainly improves our rating on bonds. Now, I actually want to compliment the city in a great manner. I've looking for things that I've had to research recently. I haven't seen another city or municipality in our comparables that has anything close on their website for information that Evanston has. And when I say close, I mean it's not even, it's remarkable. So someone should get, if there's a blue ribbon for organized website and information on it, that should be awarded to whoever manages that. They do a great job. It's understandable, it's intuitive, it's great. These other cities, there's like next to nothing. So again, I want to give kudos to the staff for that. It's fantastic. And of course, all the staff feeds into that website because their documents are on it. Now, and I do look at everything. I like to punch around, I like to be informed. And so the one sheet on the PPRT I sent you, it's got the actual website, the link. If you go on that and you click on that, it'll put you right to the State of Illinois revenue. And if you look for the PPRT number, there's loads of this, but it goes once you do it once or twice, it goes very fast. There's actually another number that, there's another place that they show this that I just came across again today. I'll provide that number too. So there's 2 places on the internet you can check on PPRT. And the one sheet that I sent later today, if you don't have it, it's as of May 31st. I highlighted it. And according to the state, they had sent us $1.9+ million in PPRT. Then I also went to there's a great section on the monthly financial reports. So I like to double check things. So I went to the most recent monthly financial report, which is May 31st, 2023, which the state says we have 1.9 million. But the report on the website it says that top general fund revenues year-to-date. And year-to-date is only 1.3 million. Okay, so that, I'm curious, I was curious about that. I'm going, how can that be off by so much? Well, I'm going to see a percentage, but when you subtract the one number from the other, it's exactly $605,000. That's the amount that goes to the police and fire pensions, am I correct? But I was just curious, it's still revenue. Do you know, if you want to say how much revenue we got this year? So there's a bunch of other funds. I just want to know if we've used money out of those funds, do you also drop that number? That's all, I'm just curious, because I know it's one number, and if someone was just casually looking at this, they wouldn't go to lengths to actually go to the state. They'd look at this, and it's off by 600,000. I understand why it's off by 600,000, because that money was distributed to the fire and police. I think it's 280 and 325 to the police, right? But I'll wrap it up. But it still says surplus. Top general fund revenues. And I don't know why you would, just because you distributed that money, would drop out, that it's no longer considered revenue. So that's, again, thank you for your time, and I want to say again, if we didn't have such a terrific website, some of these things couldn't come up. And again, my hat is really off to them. This is a tough job for everyone. I think with the lack of, that you don't see the reserves in a bunch of funds. We're all doing this with one arm tied behind our back. We don't know what total reserves are. That's a tough deal. So,
Okay.
again, thank you very much. I appreciate your time.
So Jack, also, I would like to thank you for the work you've put into the pension funding policy. It's been invaluable, and I think we're very close here. But the insight that you've given us, the thoughtful comments.
Well, I appreciate that.
Hard
Thank
to
you.
very write any policy by committee, but appreciate your input.
Thank you.
Okay?
And also the research on the rate, we worked on that together. Thank you.
Very good. Tim?
Good evening, Timothy Schoolmaster of the Police Pension Fund, and I would echo most of Mr. Mortel's comments, and I'm grateful to him for some of his research. I have another insight into this that I'd just like to quickly address with you, and hopefully it would cause you to change your thinking a bit with this. As he pointed out, during the last 4 years, the actuaries have come to us because we adopted those rates with a 6.25% interest rate assumption. City staff then went back to him and said, recalculate him at 6.5%. Now, I'm guessing that when he came to the council and said, this is why you want to do this, he told you that it would save you $1.5 million every year. What I don't think he told you was it's going to cost you a lot more later, and it has. Just these 4-year figures, an increase of $18 million in the unfunded liability. And that accrues interest at whatever rate you have. Now, something else is going on here too, which makes these numbers bigger than I think most of us realize. The Municipal League, in their infinite wisdom, has decided that 90% funding is sufficient, and so they take 10% and they put it over here and they pretend it's not there. It's still cranking interest figures, and sometime it's going to have to be paid. Envision paying your mortgage off, having it all paid off, but you still owe $100 million. Well, how's that going to work? What you did with your 100% funding policy is you moved that 10% over into the big column now. And so the 10% is no longer there. And it's the way it should be. I'm not going to be able to pay benefits with 90%. Nobody's going to be able to pay it. Last figures I saw on that were $26 million, plus the $18 million. The 2022 figures on the increase in the unfunded, I'm guessing will be $4 to $5 million, but you put in an extra $4.5 million from reserves, and that kind of cancels that out. And then there's the interest on the 26 million, and so that brings me to 46, maybe up to $50 million that the debt has increased. And whatever we adopt, it's supposed to go down. So the 18 million is the proof in the pudding. why would you use 6.5 when it keeps going up? You want to use 6.25. And I would think some responsible member of the committee would recommend 6.25 or even 6 if you were to pay that for five years. There's no way you can overpay this with the amount of debt you have, which is increasing each year. So I would like you to consider that, because I think the 6.5, 6.25 thing has been proven many times over. That it has not reduced the debt, and that's the goal of this whole. So if any member later on would like to move that recommendation be amended. Mr. Mortel speaks for the fireside. I appreciate Ms. Reich's work on this with him on that, but I just don't see with these kind of numbers how you can continue to use that number. Thank you very much.
Thank you. And we will have some information later on relative communities that'll help put it in perspective, but thank you for your comments.
Tricia Conley, Second Ward. I just want to echo what these two gentlemen have said. They are clearly experts, as you all know, and really think about our complete town, our residents in this town, and what the impact is long-term for not handling this. Thank you.
Do we have any additional public comments, online or otherwise? Sure, please.
Hi, my name's Mary Rosinski. I want to say I'm really grateful for this committee, and I hope we do listen wholeheartedly to Mr. Schoolmaster and Mr. Mortel, because I think that'll help our financial situation. I'm here on another question, and I just haven't seen it answered anywhere, and maybe it has been out there, but I know at one point we'd gotten up to like a $58 million or $54 million surplus, and I don't really know if that was explained or what happened with that money. So if that could be addressed, and the reason I'm asking this is because there's mixed messages throughout our community, and on the 4th of July, when you're talking to lots of people, I think at least 3 or 4 people said, you know, it looks like Evanston's going bankrupt. And I'm like, where'd you get that from? And I don't know where they're getting that from. And I said, you know, we had over $50 million surplus that's being sorted out. So I think it's really important. And the reason it's really important is because as a realtor for 40 years, I bring people to our city, and I bring people to other communities. And if people feel that, you know, we're not holding our own with our city budget, and there's no reason for them to think that we have it, and you guys are helping get it all cleared and understandable, and staff has done as Mortel does. But I think we need to look at if you may know that's kind of a buzz out in the world right now, and some people have said, you know, it's going to help with the Evanston debt, or Northwestern, you know, whatever they're doing will help with the Northwestern debt. I'm like, no, that's just not true, because if you looked at the $3 million were being promised from Northwestern Direct, and you look at even $40 million, we've got like so much overkill. We don't need to bring Northwestern into our financial situation. We just need to clarify it. But I'm afraid of losing people to other communities because of misinformation, because there's 3 reasons why people choose a community, and it's their schools, their parks, and how well their cities run. So, you know, I think we need to be cognizant of that. So I thank you again for all your time and your great work.
Thank you.
Hi, Jeff Barini, Second Ward. My background is corporate, and corporate world is rife with cliches and things like that. One of them is the first rule of holes, is that when you find yourself in a hole, stop digging. And so that's where we are right now with pensions. And so I urge this committee to fully fund the pensions going forward. Everything we do today is certainly going to help immediately and enormously in the future. So I just encourage all of you to heed the advice you've been given here and to fully fund pensions going forward. Thank you.
Thank you.
Okay, we'll move on to virtual public comment. Mike Basilko, go ahead.
Thank you. I echo what everybody previously said about the pensions, so I won't repeat that. But I was calling in because I'm confused about two things in your packet. On page 22, 24, there's this little chart showing, the capital improvement for the fire headquarters and the police fire headquarters, service center, civic center, noise. There's these huge ranges of costs for future costs, from 50 million to 100 million, 35 million to 55 million, et cetera, for the totals of 145 million to 275 million dollars. Where can I find the detail on how those numbers were achieved? I mean, usually there are, documents issued, there's pricing received, something solid you can base your estimates on. So that's a question I'd like somebody to just be able to tell me tonight, where I can find that information. And then on page 17 of 24, so a couple of pages before page 22, there's a reference to, in the summary on this memorandum, it says 2022 and 2023 GEO bond issuance. Well, there was no GEO bond issuance in 2022, so I'm confused about that. So those are the two questions. If somebody could just explain tonight, that'd be great. Thank you.
Thank you.
Darlene Cannon, did you have a public comment? Okay, we'll move on. Meg Welch.
Yes, Fourth Ward property owner, and looking through the proposal, there's a reference, and I'm sorry, I don't have the exact page, but it is in the proposal, that refers to approximately 100% funding. And my understanding is that we're currently at 90%, 90% could be interpreted as approximately 100%. So this looks like a loophole that is somewhat concerning. Why go through all this work, all the wonderful work that's been done, and just have that loose language. So I'm not sure why that was included, and I'd like the committee to consider striking it. I'm a property owner. I'm worried about taxes in the future. So also, there's a moral obligation to give people the pension that you said that you're going to give them, and we really need to make sure that we can do that. None of us would like to retire and not have our Social Security available. So those are my concerns. Thank you.
Very good. Is that the last public comment? Great. Thank you, everyone. So the next point is the approval of the minutes from the June 13th meeting, which were
I will move
circulated.
approval.
Thank you.
Second.
Second. All right. We'll go ahead and vote.
Councilmember Kelly.
Aye.
Councilmember Nguyen.
Aye.
Councilmember Newsma.
Aye.
Committee Member Rikus.
Aye.
Chair Livingston.
Aye.
Councilmember Burns.
I'm going to abstain. I don't think I was there for that meeting.
Councilmember Reed.
Aye.
And Committee Member McMillan.
Aye.
I want to note that just as a point of information, a point of order, we can do a voice vote.
We don't have to, though, so keep going.
All right.
We don't have to, but
Very
for
good.
small things like this, we could.
Okay. Very good. Okay, so the minutes pass. All right, so we're on to item 4, the review of the annual comprehensive financial report for 2022. Mr. Desai, do you want to
So moved.
take us through where you are and when we'll get the final report?
Okay.
Good evening, Chair, the members of the committee. The original plan was to come to the committee. I have with me the auditors from the Secretary Company, but unfortunately, with one of those new things being implemented regarding the lease reporting, it has been delayed. But since she was here, and basically we have the draft financials ready, only few numbers would change, which is not significant, and she can go into the detail. We thought that might be a good idea so that if you have any questions about any other financials, which you would see here, we can get the answers from her. And then she would come back again once the report is final with their audit opinion and the communication to the Finance and Budget Committee. So I have this Martha Trotter. She's a partner from the Secretary working on our audit. So Martha, take it over.
Thank you. Good evening. So I have as Hitesh mentioned, the draft annual comprehensive financial report is available, and at this time what's open, what we're expecting to complete is the implementation of GASB Statement Number 87, which is effective for the fiscal year ended December 31st, 2022. Outside of that implementation, all of the items that were required for our audit testing have been provided to us by the city, and we've completed the testing and drafted the financial statements. So with the exception of the implementation of the lease standard, the report draft balances can be relied upon and have been through our testing procedures as required by generally accepted auditing standards and governmental auditing standards.
A quick point of order. Apologies for interrupting. There wasn't a motion on this, so Chair, are we accepting and placing this on file now, or what is the action with this item?
I don't believe this is an action item.
It was like a recommendation from this committee to the council to accept and place on file, but since it's not a final report, it will be just a discussion.
And should we consider then, once the final report is issued, could we have a phone call to accept it once it is final, or how should we proceed from here? Or do we need to?
No, she would come back again, and you would recommend the council to accept and place on file.
Because our next meeting is in September. Do we need to do something earlier?
Yes, they can come to the council too. And if we have a special meeting, I don't know whether we have made a decision on that, she can come to the special meeting.
Well, that's what he's saying,
maybe you can come back to us over the next few days and say, what's the most efficient way? If we could do a virtual meeting, I don't know if we still can, but is there a way that we could have a Zoom meeting? You could post the final report, give us a few days, and then accept it if that's okay with, at least vote on accepting it, however people would like to. Maybe you could come back to us.
Since this is going to go to council for final accepting and placing on file, I wonder if it's, just so there is some action today, and I don't know if we need this presentation twice or if there's only a minor change. I move that we recommend, and also I think we need a motion even to discuss this. So I will move that we forward this draft report, what will eventually be the final report, on to council for approval.
Do we have this draft report?
No,
I don't see it in the packet.
Right.
So
And that's why I would like to have it. Ideally, I understand that, but I would rather have it that, it's sent out as a part of the package, and with the audit opinion, and there is a thing called communication to the governing board. So, once it's ready,
If I could weigh in here, if I could weigh in, Councilmember Reed, we don't actually have a report to consider. And so it's my understanding that we do as a city council have to officially accept and place on file a report, which we don't yet have.
Right.
What's our deadline for that?
The deadline was June 30th, but
Okay.
because of this lease implementation, generally we are done with that, and we hope to get done. They have some staff shortage and all that too, and she can, so that's why it's been delayed, because of this implementation of the new standard.
right.
Okay, so let's just review the preliminary report tonight. Then when the final report is ready, we'll see where we're at. If it can come back to this committee, great. If it has to go straight to council, so be it.
Yes, agreed.
I mean, I would like to have a report in hand before meeting. I mean, I feel a little bit, we
Yeah.
didn't have this to review, so I'm a little bit uncomfortable with just saying, whatever you finally get together.
That's why we're not
say.
voting on anything tonight. We're
No, I
just getting the
understand,
status
but-
report. So
but I have-
please, let's continue.
Presentation without being able to review
Let's,
is difficult.
All right, so
There's no motion on the floor, too, so this is there should be a motion for something, for anything to be discussed. So that's what I was trying to get to the heart of.
So you can keep
What is the motion?
for discussion, and again, to have
So do we have a motion to discuss this?
I-
I think we do.
I believe Councilmember Reed made that motion. Initially, I will second that motion for discussion.
And I think we're, voice vote on that, we're all fine
So
with,
good.
with reviewing this.
And again, I mean, to answer Councilmember Kelly's, when she comes back, when the final report is ready, yeah, it would be included in the package, so you have a few days to kind of look at the report, in the future, yeah.
Very good. Yeah.
So, just wanted to highlight some of the items in the draft report that will assist in your review of the financial statements once those are issued, which we're targeting issuing the final reports next week. Once the implementation of GASB 87 has been flowed through the balances and been through our internal review processes, it's a pretty significant requirement for the fiscal year. So although from a financial statement standpoint, I can highlight what will change from the draft that I have here today, from a testing and review standpoint, it's a pretty significant undertaking that requires review of every lease or lease type contract that the city has in existence and analyzing those, calculating a net present value of the contract amounts, and then calculating those reclassification adjustments into the financial statements. So that's the component that's still open, that is significant amount of work required, and is the piece that is remaining to be flowed through the draft reports that I have here. But just to assist in your review of the financial statements, once those are issued, I'll highlight some of the key sections of the financial statements, and the majority of these balances outside of those lease adjustments will remain as is in this draft. As always, our independent auditor's report is at the beginning of the annual comprehensive financial report, and based on the testing that we've completed, we are anticipating the issuance of a clean, unmodified opinion on the city's financial statements. That's the highest level of assurance that we can issue, and that's based on the testing that we've completed in accordance with generally accepted auditing standards and governmental auditing standards, which are additional compliance requirements due to the level of grant activity the city has. There's a section within the annual comprehensive financial report that I always highlight and like to point council members to. It's called the Management Discussion and Analysis. This is presented by the prepared by the Finance Department, and it provides additional context to the balances in the basic financial statements. So once the annual comprehensive financial report is issued, this is always a key section to look to receive some context and analysis to the financial statement balances themselves. It provides comparative analysis and discussion on significant variances or changes from prior year. So this is an excellent kind of an executive summary of the report overall. So the management discussion and analysis is always, I would highly recommend reviewing that and allowing it to guide your understanding of the balances themselves. The basic financial statements begin with the statement of net position, followed by the statement of activities. These financial statements are reported on a full accrual basis of accounting and present the governmental activities and city's business type activities. So the governmental funds are presented in total. The city's business type or enterprise fund activities are presented in total. And then the library, the component unit of the city, is presented as a separate column. These are presented on a full accrual basis of accounting, so unlike the reports that you're used to receiving on a monthly basis to analyze the fund financials, the governmental activities include long-term assets, long-term liabilities, so those lead to changes from the governmental fund balances totals to what's presented as net position on the statement of net position for governmental activities, which you'll see here in total, governmental activities net position is a deficit of 30.7 million. The business type or enterprise fund net position in total has a balance of 317.7 million. There's some information which I will highlight upcoming, which shows how we get from the fund balances of the governmental funds to the net position of the governmental activities. The statement of activities is essentially the income statement for the information for business type and governmental activities, as well as the component unit information. And this is where you'll see the changes to the city's net position over the fiscal year. So net position for governmental activities for the fiscal year ended December 31st, 2022, with the exception of the GASB 87 lease adjustments, increased 41 million for governmental activities and 8.2 million for business type activities or the enterprise funds. That's followed by the balance sheet for the governmental funds. So this is where you'll find the reporting for each of the city's major funds, which are the general debt service and ARPA funds are major. And the remaining governmental funds are all considered non-major. So that's consolidated into a total non-major governmental funds column. Information on the details of that those non-major funds are presented later in the report. So you'll see here in the governmental funds balance sheet, the general fund ended the fiscal year with a fund balance of just over 61 million. And on the governmental funds statement of revenues, expenditures, and changes in fund balances, you'll see what the net increase to the general funds fund balance was for the year.
Can you just mention that general fund includes the human service fund? That's in here.
Sure. The general fund does encompass the human services fund as well. That is reported as one fund on the financial statements. So the general fund increased its fund balance for the fiscal year of 27.4 million over the prior fiscal year. So there was an overall improvement in governmental funds fund balances as well of 17.9 million for the fiscal year. As I mentioned, there's one statement in the report that assists in reviewing how you get from the fund balances of the governmental funds, which ended the fiscal year at 91.4 million, to that net position deficit of governmental activities of 30.7 million. That's found on page 11, and this is a reconciliation of the fund balances of the governmental funds, which are presented on a modified accrual basis of accounting, to the full accrual basis of accounting entity-wide financial statements. So you're taking your fund balances, which exclude any long-term assets and long-term liabilities, and adding in those long-term items for the full accrual presentation. And this breaks down how those changes impact your fund balances of the funds versus your net position of the overall city's governmental activities in total. So as you'll see here, items such as capital assets, net of accumulated depreciation, any pension liabilities, or in the case of IMRF, pension assets, any deferred outflows or inflows of resources, which are timing items related to those actuarial calculations, and long-term debt of the city flow through those fund balances to get you to your ending net position of the governmental activities. So this is a very helpful schedule to see how you get from your fund balance, your positive fund balances, to your net position.
Yeah, I think from what Sherry just said, you can see that, the substance of our conversation tonight, the police liability and the firefighters liability are sort of the consistent numbers we've been talking about. So I think in summary, there's, and you kind of said this, there's no unexpected differences between the numbers that we talk about on a modified accrual basis, on a monthly basis, and the full accrual that you have in this report. Correct?
Correct.
Okay. Right. But that's what drives the overall governmental deficit is the really the liabilities on the pension side, which, as we all know. So, okay.
And I wanted to highlight on the governmental funds statement of revenues, expenditures, and changes in fund balances, and also on the balance sheet. The few changes that you'll see from this draft report related to the GASB 87 items, for any of the leases where the city is receiving revenue for the right to use of an asset, such as room rentals, parking space rentals, anything that applies under GASB 87 and is considered a long-term lease, what we're calculating now, those items will be presented as a long-term receivable, offset by a deferred inflow of resources on the balance sheet. So although ultimately the impact is pretty minimal to the funds, there's some reclassification and a change in presentation. This hasn't been presented before. In the past, before GASB 87, those revenues are collected for the fiscal year and reported just as revenue. The new requirement is to calculate the net present value of those total contracts, including any potential extension periods, and present what that total receivable is for that contract. The deferred inflow offsets the receivable to show the short-term receivable was expected to be received within the upcoming fiscal year. But the reason for the presentation of the full long-term receivable is because it is offset by that deferred outflow or to adjust for the timing. So you see the total contract value receivable, but what is impacting the fund is just the short-term or upcoming fiscal year receivable. And on the income statement side, what you'll see is a change from, it's a reclassification from charges for services or revenues to show the interest portion that's calculated related to that, and the amortization of the right to use of the city's asset. So those will be the changes that are upcoming to the reports. Overall, the amounts hitting the funds won't be significantly impacting. It's more of a presentation and the calculations that are going into it to determine the net present value that are the legwork of it. The proprietary fund statements begin on pages 14 and go through page 18 of the financial statements. One thing I just wanted to note here that you might notice when you are reviewing the report is on the proprietary funds statement of revenues, expenses, and changes in net position, you might notice in the non-operating revenues a negative investment income for the water fund and the sewer fund. So I just wanted to touch on the reason for this. Overall, investment income for the fiscal year actually increased significantly as it relates to interest earnings. However, the change in unrealized gains or losses related to investments are netted with interest income and presented as investment income on the financial statements. So those negative balances here are due to the combination of your interest earnings as well as the unrealized gains, or in this case, for the fiscal year, the unrealized losses on investments. So those losses haven't been realized yet. Those are investments that are being held. Just due to the fiscal year results, there were losses that netted with those investment earnings, which resulted in the negative investment income presented here. And then just to highlight the pension fund, the trust fund investment income statement and balance sheet are presented also in the basic financial statements ahead of the footnote disclosures. This is a combined balance sheet and income statement for the police and fire pension fund. There's additional information in the footnotes that breaks out the individual pension funds information that reconciles to this consolidated schedule.
Yeah, and if I could just point out there, you can see that the firefighters fund is much simpler because it's just the state fund at 86, right? So the rest
Correct.
of it is the individual underlying assets being held by the police fund, which has not yet been consolidated, pending the legal actions.
Correct. So all of the outside of the cash balances, you see exactly what investment balances are being held by related to the firefighters pension fund here. Those are consolidated to the downstate plan. As for the police pension fund, the remaining investments are associated with the police pension fund. Uh, Sorry, I don't have that page bookmarked here, but there's,
We'll look at that detail
Okay,
when,
yeah,
when we
just-
get it, and I
Just
think.
want to make sure there's
looking
cash
through.
management going on like that.
yes, so there is information in the footnote disclosures where you can see how the cash balances break out between the police pension fund and the fire pension fund.
And if everybody can remember to turn your microphone on too, for the people at home in the recording.
Good. Does anyone have any questions at this point, recognizing that everyone will have to read the reports or have access to the final reports later? Are there any questions? Okay, yeah. Councilmember Reed, yeah.
Yes, I have my hand up. So one, thank you for your work here. My only question is to get your insight. I don't know how many municipalities you all work with. If you happen to know that number off the top of your head, please share it. But I'm sure it's quite a good number. Can you tell me, we pay you folks a good amount of money to do this, and it takes, specialized knowledge to be able to compile all of this. But fundamentally, I think our budget should be easy enough to understand and follow and track all of this stuff that, a layperson, a resident, could understand some of these numbers. And, even some of this, particularly not being able to see it ahead of time, for a lay council member like myself, is not the easiest to follow and really understand insights. So one, can you tell me what other units of government or other, can you share best practices for making budgets accessible and some of this information more accessible for residents?
There is a section in the report following the footnotes and required supplementary information that's included in the annual comprehensive financial report, where each of the funds is presented on a budget versus actual comparative schedule. So there are, for each of the city's budgeted funds, there are statements and schedules in the annual comprehensive financial report which present the fiscal year budget. If there's any amendments to the fiscal year budget, the original budget as well as the final budget, and then the actual activity for the fiscal year. So there is, so you're able to review how each fund performed in comparison to what was budgeted for those funds. So there is information that follows the required supplementary information of the report for each of the cities' budgeted funds. So if these are annual comprehensive financial reports, so that's presented on the fiscal year basis.
I think maybe partially to his question too, are our financial statements sort of as user-friendly as what you see in other communities? Typical, better, worse?
Sure.
So
in terms of what is presented in these financial statements, there's a lot of prescribed standardization of financial statements. So formatting might look different, but in terms of the information that's presented, the basic financial statements, the required supplementary information, that's all prescribed by GASB and GAAP standards. So the report is presented in terms of what's required. Additionally, the city does submit to the Government Finance Officers Association annually and has received the Certificate of Achievement Award annually for the financial statements, which prescribes additional requirements for transparency and readability of the financial statements. The city has met those requirements and has been awarded that award annually for its annual comprehensive financial report. So
how special is that award? And are those standards, how often are those standards adjusted? Because I feel like every municipality that I've gone through their budget, I see that stamp listed. So it seems like it's almost a participation trophy.
Well, there's a lot of work that goes into preparing financial statements in order to be able to receive that distinguishment. There's also a separate budgetary award, so there's two separate, depending on which report you're referring to, there are budgetary awards by the given by the GFOA, as well as rewards for the annual comprehensive financial report. So I guess it depends which one you're referring to. The certificate of achievement is specifically associated with the presentation of the financial statements.
Are there any other questions from the group? I just have two very, very brief ones, if no one else has anything. Did you have any major disagreements with the financial staff relative to these financial statements?
No.
No. Were there any material control weaknesses that you identified as part of your audit?
No, there were no, and that's one of the reports that will be issued once the audit is finalized, the communication to council. There were no material weaknesses or significant deficiencies that came up during our testing.
Very good. Thank you. Congratulations to Tesh for getting through the audit process. Almost through. This close.
We're close.
Can this document be shared with us?
All right. Very
Can
good.
you share this draft? That would be great.
Okay.
Okay. Thank you.
Thank you.
Thank you. Okay. All right, very good. And we'll all review the final report when it comes out and figure out how we formally recommend it if we need to. Maybe we don't, however the city wants to proceed. All right, so the next item on our agenda is something that we have been working on for an extended period of time, and I think hopefully we're completing it tonight. With respect to our adopting of the pension funding policy for the public safety pension plans. This has, everyone has had input into this document, and the current draft of the document and the resolution is on pages 9 through 13 of the current of the packet. We've talked about this previously, but there's just very briefly a couple of sections. The headlines are, everyone is committed to get to 100% funding. I'll come back with a couple of amendments in a minute that I think will address some of the things that we've talked about or some of the comments. But everyone here wants to get to 100% funding by 2040. It defines the actuarial sort of broad guidelines. It defines, most importantly, an actuarial determined contribution, which is what is the actuary calculating what the annual contributions need to be to get us to our goal of 100% funding, and we intend to make 100% of the annual recommended contribution to get to our eventual 2040, what we've defined here as the full funding date, when we would anticipate we would be we would have our assets equal our liabilities. We define that the investment rate of return assumption will be considered by a focus group on the Finance and Budget Committee, as well as the pension boards. We should be able to get to a consensus on what is a conservative rate, on what we think we should use and what the actuaries should use in the reports. And then this was an addition. We talked about before that this draft policy really started with a model policy from Foster and Foster, which we're largely in full agreement with that. We added here into this report a policy, a sources of pension contributions. And where is the, let's say, $25 to $30 million of required pension contribution going to come from? We felt like that had to be included here. And the way that we have prioritized these funding levels is we already have an existing pension property tax, about $20 million a year, that would remain flat, I would say, as long as we can keep it flat. We have the maximum amount of PPRT. There can be some complex calculations as to how whatever the money is that we get from the state on PPRT is allocated between pensions and other expense sources. And then we look to the general fund, and the general fund then is either in deficit or not. All the revenues, all the expenses of the general fund, do we have room within the general fund to fund a portion of the overall required recommended actuarially determined contribution. Hopefully, we have a budget that is not in deficit. But if it were to be in deficit in future years, we can look at the general fund reserve balances relative to our policy. And again, these are all budgeted numbers. We're doing all this in the fall and, for really the next year's budget. But when we look to budget, what are our available reserves? Are those available reserves sufficient that we could then bridge the gap to the totality of our required pension contribution? And if we don't have excess reserves, if we look to other funds and don't have excess reserves in other discretionary funds, it's certainly our intent that the words say then and only then will we look to a pension property tax increase to make that required contribution. So I think that a real key here for me, at least on 4A, on section 4, is to be clear. You go through all of it in this, all the words in this document. It's the intent of this policy that the ADC, the actuarially determined contribution, to keep us on the path to full funding by 2040, that's what we're going to do. And if we have to raise the pension property tax to do it, as unfortunate as that might be, if we're left with only that choice, and the city council has adjusted the budget as much as possible, look to other funds, then that is really what I think the Blue Ribbon Committee talked about as last resort. The pension contribution wins. The property taxes, it's the recommendation or really the guideline of this policy that in that case, we would raise we would expect the city council to raise the pension property tax to go ahead and do that. But ultimately, in a battle between those two, we have made the decision that we have got to get this behind us, and we want to make the contribution even if, after looking at all these other sources, we would have to raise the pension property tax. And then finally, we're also encouraging the city council, if we have some unusual asset sales, unusual non-recurring revenue sources, that it consider that some of that money go into making really an advance payment or bringing down the pension liability faster. But that's up to the discretion based on what the nature, I think, of what those asset sales are at the time.
That would also be like unrestricted surplus.
Which I think is being used to fund.
But I mean, if there was unrestricted surplus above and beyond after we
Could
hit
consider
that, I would just ask that I can do it at council if not, but I would ask that we add.
There is room to make discretionarily more contribution. Okay.
I think what Councilmember Kelly was just asking for is already captured in section 3 or paragraph 3 there.
Well, that's to reach the 100%.
Additional unrestricted revenues.
That's to reach the 100%, but this would be surpassing the 100% to bring it down. Additionally, I would just like to see also, when there is unrestricted surplus budget available, that also we consider. We don't automatically, but that annually we consider if we're at our 100% and we have unrestricted surplus, that we annually consider making additional payments.
Okay.
I'm fine with making that amendment at council and not now in order to move that forward.
And then I guess, the council could always discretionarily contribute more if it wanted to.
I just think.
So, yeah.
Point of order. I just want to, there was never a motion made, so I'll move that we approve the pension plan as presented in our packet.
So we did have a little bit of discussion before. There's 3 minor things that I think we should consider in changing what's in the packet modestly that will address some other issues that people came up with.
Yeah, that should be done. We should make the motion to get it on the floor for discussion, and then those amendments be made. And I likely support the amendments that are going to be proposed.
I will second the motion to discuss this, which we are now doing. And before we vote on that motion, I'm sure we'll be entertaining motions to amend.
Okay, all right. So, I'm sorry, help me on the procedural element here.
So if there are amendments we need to make, I think the appropriate thing to do would be to go through them kind of one by one and to make a motion.
Sure.
Second, approve those amendments in one by one or collectively.
Maybe, okay, so can I bring up what we've discussed in terms of, I think, mutually agreed amendments to what is posted?
Sure.
Okay. So the first point would be in section 1, under the policy goal, full funded by 2040. In the next to last line, we can pull the word approximately. It was not meant to be anything scary. I mean, ultimately, a pension funding number, you never get to an exact number because the assets and liabilities are moving, and it's not like a bond, but that's fine. It's not critical. So the first would be to strike the word approximately.
And if I could just weigh in there, that one makes sense. And just to clarify for everyone listening, approximately in this case did not mean, was not intended to allow us a plus minus 10% window. It was intended to allow us a plus minus 1 or 2 0.5% window, because the number is always changing. You don't know exactly what you're shooting for. So that was the intent. I do think striking the word here just makes it cleaner, and I'll support this one.
Okay.
So it's been seconded, that
Well,
amendment?
let's
Do we vote?
just
Yeah,
run
maybe we
through
talk about
these
all
and-
three together.
Let's just
We can do
run
all
through
three
them, and then
together.
we'll
All
move
right,
them
so
all
we're
together.
striking approximately. The second proposed amendment is section 3, number 1. The intent here is, look, the public safety pension boards and the city should be able to agree on who the actuary is. So we could say here, the actuary shall be engaged by the city of Evanston, and then instead of say in consultation with, say, and the boards of the public safety pension plans. Mr. Desai, do you have any concerns relative to that? There's no reason why we can't agree, but make it clear
So
that.
I just want to make sure, I think that sounds good. I just want to be clear, is enrolled as acceptable as the joint actuary? I just want to make sure that that means the same thing to everybody, the representatives of the boards. That enrolled and joint actuary does not have the same,
Enrolled means certified.
right, but we do hire.
Joint means we've selected them.
That we might need to change that to the word
collectively.
joint. That's
Right,
why I'm
so,
bringing this
which
up.
we just said we were going to do, so I don't think we need the word
Mr.
joint.
Schoolmaster, do we need the word joint in there? Or are you okay?
Well,
on just-
the previous setup on this, there'd be 3 equal partners retaining an actuary through the RFP process. What happened was the city assumed it all and then sends us the bill. Now, that does not leave us with legal recourse if something is done that's not
Okay.
according
Right,
to
so-
that. Yeah.
so I think-
When was Foster and Foster last rebid? It was during COVID, and I'm not sure that it even was rebid. It was just kind of done. And I think we're due too, to rebid. So I think we need to look at that. But joint means you've got 3 partners. That was the original goal of hiring them in the first place.
And I think, so the proposal in the second part of this amendment is strike in consultation with and say and the, replace it with and the,
Okay.
right?
And
So
is there any
that-
way, can we also change enrolled to joint?
Well, enrolled is going to the technical qualifications of the actuary. You know, like a CPA, sort of enrolled actuary. So I think that's fine. But I think we've made clear here in the policy that it's a joint decision. Do we have to call them joint actuary? It's just that we've defined actuary A. It's this jointly selected person. Okay? So that's the second point. The final one, and Sherry's going to take us through this in a minute, relates to 3A. And this is a key element of what discount rate, expected rate of return, do we want to use? We want to be conservative. We want it to be as low as reasonably possible. But what's the process there? And so the amendment would be we keep on 3A, the investment rate of return assumption, and then we insert will be recommended annually to the City Council by the Finance and Budget Committee. The Finance and Budget Committee will consider input from the representatives of the public safety pension boards. And I believe that replace that with the rest of that sentence then drops off. So the whole first sentence is The investment rate of return assumption will be recommended annually to the City Council by the Finance and Budget Committee, period. The Finance and Budget Committee will consider input from the representatives of the public safety pension boards. Okay, so I think it, and then finally, the rate will be reviewed by the actuary for reasonableness. Okay, so that's our recommendation. I think, again, there's no reason why pension boards, Finance and Budget Committee, cannot come together on what's a reasonable assumption for the assumed rate of return, which is also used as a discount rate for the liability. So those are the three. I think we've, with those three things, got rid of approximately, made clear that the actuary is jointly appointed. I'm not calling them joint, but it's jointly appointed. And then finally, we need to come, we will take input, but ultimately this Finance and Budget Committee will make the recommendation to the City Council, and we will take input from the public safety pension boards on what that rate should be. And Sherry's going to take us through some additional information. So it's those three amendments that's, together make the amendment. Does anyone?
I will move approval of those three amendments. So let's call a vote on that.
Councilmember Kelly?
Aye.
Councilmember Nguyen? Councilmember Nusma?
Aye.
Committee Member Rikus?
Aye.
Chair Livingston?
Aye.
Councilmember Reed?
Aye.
Committee Member McMillan?
Aye.
Okay, so now I think we have a motion to vote on the amended.
Is there further discussion?
Yeah.
Yes,
Yeah,
Yeah, if there's further discussion, we should have that.
yeah.
The
Okay.
last thing we will do will be to vote to approve it as amended.
So then whoever has comments on the now amended pension funding policy. Councilmember Reed, do you have a?
Thank you, Chair. So one, thank you, Chair, and everyone for those really thoughtful amendments. I think that gets us exactly where we need to be on this, so great appreciation for that. Secondly, there's one thing that, Chair, when we discussed this, and some of my colleagues have discussed this with, I think this needs to be an ordinance and not a resolution. And so I would like to move to have this drafted as an ordinance rather than a resolution. And if folks want an explanation why, we can take a few minutes to explain, but maybe it's self-evident.
I would second that.
Can you briefly say why? Because I don't understand the.
Sure.
The motion, the motion has been moved, it has been seconded, so it would be now appropriate to discuss that.
All right.
Great.
Let's discuss.
Yeah. Sure. If I may.
Please proceed. Yes.
Okay, thank you. So the reason I think this should be an ordinance is an ordinance is harder to undo. It is more binding than a resolution in that it is harder to undo. And it holds more weight. It's more, it's easier for residents to find. It's easier to be located. And I think it gives this a very special standard, and it will help ensure that in perpetuity, going forward to 2024, or I'm sorry, to 2040, that councils will be adhering to this policy.
Any other any other thoughts on that?
I'm not sure if we have any other policies that are encoded as ordinances. So I agree with, kind of emphasizing the importance of this and making sure it's visible and accessible to the public. But before I'd be comfortable moving forward with this as an ordinance, I'd want the legal department to weigh in and give us some guidance.
Yeah, no, I guess there's not a representative from legal at the Finance and Budget Committee, but certainly we would have that opportunity between now and council. There are, you know, procedures that are written into code. You know, the operations within the clerk's office, for example, are written into code. You know, duties of the city manager, duties of the police chief are written into code. Duties of council members are written into code, and I would see this as a duty of council members that would be written into code.
So would it be a viable option here to say that the Finance and Budget Committee wants the city council to discuss and determine if this should be in the form of a ordinance or of a policy? Because I think it would be, because we're not talking about changing the policy, right? The policy can be set. It's just a matter of what's the best way, how does the city council want to treat this to increase the chances that it is as enduring as possible and actually gets us to a 2040 fully funded state.
Yeah, and I would imagine that the sentiment is there on this committee to make this as official and as binding and you know, as difficult to undo as possible, because there's a lot of work that went into this, and this is setting us on the right path, and we don't want the, you know, conveniences of a future, you know, the desire for convenience of a future council to undo this policy very easily with just one vote. You know, I think having that thoughtfulness of two votes because of an ordinance change to undo is really important, as well as making this policy easy to find. And so I think the sentiment is there to support this, and I would encourage us to support this motion. I am certain that this can be done and added to our code. And if for some reason it can't, then at council it will be presented appropriately. But I think this committee should take a vote to approve this amendment and move it forward to council as an ordinance.
So,
It's been drafted, it's in front of us as a resolution. I think the most expeditious way forward is for us to approve the resolution here and approve recommendation of this resolution by the city council. If at the council level we want to turn this into an ordinance, that would be the appropriate time and place to have that discussion.
so, yeah, I'd also say, Councilmember Reed, would you be comfortable amending it or proposing this? I just think right now there's some insecurity about the difference between the ordinance and the resolution. I think that we all do want to make this as strong as possible for the sake of getting this moved forward, but then to ask legal to, ahead of time before it comes before council, to prepare some statement regarding, you know, so that we understand why this could certainly be an ordinance at council.
I withdraw the motion.
Okay, and it's an excellent point that I think should be discussed at the next level. And if we could, then vote on this as is, with the understanding that at the next level, you will reconsider, is it an ordinance or a policy? Okay.
Just information, you know, we asked the Corporation Council whether we need an ordinance or resolution, and he said resolution would be good.
All right.
Okay, so as amended then, I guess we just
So
need
the
a
motion's
motion.
on the table
Yeah.
to approve this as amended.
Yeah.
So, calling for a roll call vote?
Yeah,
would be-
calling for a roll call vote.
Councilmember Kelly?
Aye.
Councilmember Nguyen? Aye. Councilmember Nusma?
Aye.
Committee Member Rakes?
Aye.
Chair Livingston?
Aye.
Councilmember Reed?
Aye.
Committee Member McMillan?
Aye.
Councilmember Burns?
Aye.
Sorry.
All right. Looks like we finally have a policy.
All right.
Good. Okay. Very good. All right. That's good. Now, very good. So moving on to the next item, and an item that very much, now that we have gotten pensions behind us, you go back, we had 5 different areas we wanted to focus on. Capital projects is one, and this is probably our really next big thing to get into is priorities and capital projects. And
I think we have to do the rate of return.
oh, the rate of return, sorry. do the rate of return. Apologize.
Okay, the rate of return, there is a little principal draft that Mr. Mortel and I drafted, so
Point of order, there should be a motion.
we don't have to approve this today, but you can look that over.
I will second Councilmember Reed's motion to discuss this item.
Oh, sorry about that. Okay. So the way that we drafted the policy here is that the rate of the return will be set from various stakeholders, the members of the Finance and Budget Committee, city staff, representatives from police and fire pension boards, and inputs from our actuary. There's a memo here on June 13th. The Budget and Finance Committee has requested that Jack Martell and myself make a recommendation of the expected rate of return for the Evanston Fire and Police pension plans. Just to remember, the plans are now divided. The police are in the consolidated plan, no, the other way around.
Fires in the plan.
Fires in the plan. And those rates are set at about 7.125. We did a research of all different communities and a lot of input from Mr. Mortel of communities like ours. This is on page 16 of 24. And we came up with 6.5. And the reason we came up with that, we thought that, you know, we've gone a long way. We now are 100% fully funding. The 6.5 we think will be a good rate. A lot of the other municipalities are much higher. We're in a different economic state right now. Interest rates are at 4 to 5%. On fixed income, cash is even earning 5% right now. So we feel this hurdle is achievable. I was actually a trustee of the Illinois State Board of Investments. They are fortunate because of their size, are able to invest in private equity. They're able to invest straight in real estate. Their fees are much less than if we were on an individual pension plan. And so we will get the benefit of that. So I'm very comfortable at 6.5. We will continue to review this. We will continue to get the actuarial assumptions and updates. We have, 17 years to flush this out, but I would like to make the recommendation of 6.5% along with Mr. Mortel. Any questions?
Do we need to vote on that? Are we
think we
approving
do.
that as a
I guess-
committee? That's what we just, what did our policy just say?
We say we're making a we are making a recommendation.
Right. I just had a question with regard to Mr. Schoolmaster's comments. So do we know, I always feel like it is better to err on the lower side, on the more conservative side, because the residents will only gain if we do that. I mean, so you feel there's zero risk, Mr. Mortel and Sherry, that the 6.5 will not set us back?
Well, there's never zero
Well, not
risk
zero,
because we don't know, but
With the language that we have, it's worth the leap of faith. We're going to know what happens a year from now. To me, the big item was the language. Now, 6.5, if it's a mistake, that can be corrected in the future. And I'll say it's a big leap of faith. I also want to say I don't speak for the police pension board. Tim's right here. He has his own thoughts on that. He has his funds in a different place than we do. So I can again, I don't speak for Tim and the police pension board. So, but I think it's worth the leap of faith, quite honestly, for the language, and that you've cleaned it up further. Now it's just a waiting game. Let's see what it's like next year.
Thank you. Yeah, I appreciate that. Thank you.
I will concede Mr. Mortel's argument on this. Your comparables here mostly are younger funds. We are a mature fund. Long ago, we passed 1-to-1 retirees and actives. What's not known about the consolidated funds are two things. One, the best estimates that COGFA had this goes back to 2012 or 2013, was that the period to recover the liquidation costs would be at least 10 years, maybe more. So this means the taxpayers are paying these liquidation costs. If I have $100 million in investments and I have to liquidate some of them, especially mortgage pools and stuff, I will not be sending $100 million to the investment pool. The second part of this is not 100% of that money will be invested by the consolidated investment fund. The funds, since the consolidated investment funds don't want to be bill payers, each fund, fire, police, and whatnot, will maintain an operating account. For me, that's $15 million. It's a checking account. How much does your checking account pay? So while the consolidated fund might get 1% better or 1.5% better, will that counterbalance that money that's not invested and will never be invested just because of the nature of the beast? Those are things that the legislature and their supreme wisdom has plugged into this, but give it a try. We'll see next year, and you can always change. Canadian funds have been using 6% or lower for years, and they're all well-funded, and it's not because they use Canadian money.
And for that 15 million of cash, are you allowed to buy like treasuries or anything just to get a little more yield?
That's unclear. That's very unclear. But the liquidation cost, that is the big hidden thing in this thing. And that's one of our objections, those of us who are plaintiffs against this consolidation, that the taxpayers are being screwed again. Thank you.
We've heard a couple of times, let's wait and check in a year. What we're talking about is not a prediction of what the market's going to do over the next 12 months. What we're talking about is what number are we going to assume going forward until we change it. The markets are not going to be up 6.50% at this time next year. It's going to be higher, going to be lower, unless it's drastically off in one direction. And very importantly, we think it's going to continue to be drastically off. You know, only if, in that case, would we want to consider changing this assumption. This is a long-term assumption, not something we tweak even annually.
We do have 5 years of history.
So, is it appropriate for us to vote to make this recommendation?
I would like to.
I just want to make sure everyone understands. I mean, the difference is, you know, we're talking about $1.5 million difference towards our accrued liability or not, depending, that 0.25% makes that sort of a difference. So just to be really clear on that, right? So I'm prepared to support this. I'm not going to support this, but I just want to make sure everybody here is
It
clear
would
on
be
that.
about a between the two plans, around 1.5 million additional contribution if you assume 6.25 versus 6.5. But I would say, based on the work that Sherry and Jack were part of, if you look on page 16, we are, I take Tim's point that these could be different funds, you know, but they're likely invested very similarly. We're on the low end of this, and both, I think we could characterize both 6.25 and 6.5 as being on the conservative side of the ledger. And we can re-review this annually and reassess, and also at some point look at what's the different nature of the assets between fire and police, even if police is eventually in the state fund. Does it have some stranded assets that it's liquidating? We have time to react. I do think part of the reason why we were at 6.25 is because we weren't funding to 100%. It was sort of, you know, so now that we are funding to 100%, it's a little bit easier. 6.5. There was a recommendation for 6.25 by the pension boards because the city wasn't committed to be at 100. It's now committed to be at 100, so you know, there's less risk to the 6.5. So I think I'd like to vote on this, that this is our recommendation.
I'll move that we recommend a rate of 6.5% to City Council.
Sorry. We're good.
Councilmember Kelly?
Aye.
Councilmember Nguyen? Aye. Councilmember Nusma?
Aye.
Committee Member Rikus?
Aye.
Chair Livingston?
Aye.
Councilmember Burns?
Aye.
Councilmember Reed?
Aye.
Committee Member McMillan?
Aye.
Very good. Okay. Now, sorry, jumped the gun. We'll go on to capital projects. Great job. And thank you, Sherry, for leading us.
Is this also work?
Thank you, members of the committee. My name is Laura Biggs. I'm the city engineer. And I'm here before you to start talking about our 2024 proposed capital improvement program. There's a couple of things that we're going to talk about, but primarily we wanted to revisit our past proposed GEO bond issues for 2022 and 2023. And we also want to talk about some specific challenges that we're identifying as staff is developing the proposed 2024 program for capital improvement. So to begin with, the schedule that we are looking at putting together this year is a little bit different than in previous years. The staff has been working for the last several months on developing a draft capital improvement program for 2024. In July this month, we're actually going to be attending a few different boards and commission meetings to discuss and get input, for example, from this lovely committee, but also from like the Parks and Rec Board, to get their feedback on any recommendations that they might have that we want to pass through to the City Council. We will be introducing it. Currently, it's proposed to introduce to City Council in August, and then in September to have some of the CIP discussions and wrap them up prior to really getting into the regular budget season, which occurs in October and November. It is a laudable goal. That is what we're working towards. But the key is that by September, we already want to be talking to City Council. So the first conversation we want to have is about the 2022 and 2023 GEO bonds. These bonds were never issued. There were resolutions approved by the City Council in both cases that allowed the staff to begin spending the funding so that we could reimburse ourselves at the times that the general obligation bonds are issued. However, what has been happening is that we have been spending down cash in the capital improvement fund. So when we look at our cash commitments or our contract commitments, we have actually got about $26 million in contract commitments, and we have $10 million in cash to pay those contract commitments. So when we look at what is that $10 million, the bulk of it is actually really some old bond funds that were dedicated to projects from the Illinois Department of Transportation, where this is approximately $5 million, where we finish the project, but they actually hold the construction contract. They have an audit process that often takes several years to conclude, and then they'll invoice us the final amount. So we have about $5 million in IDOT obligations. And then there's around $4 million that has been transferred to the capital improvement program, or the capital improvement fund, related to 4 specific projects that have had overages. So the general fund cash reserves have transferred money on things like the skate park, the Oakton corridor improvement, in expectation that that money is going to be going out the door this year. However, we have another $16 million in contracts that we don't have any cash backing for at the moment. In addition, there is a reserve policy that's in our budget document related to the capital improvement fund that would indicate that we would want 25% of our expenses held in reserve. That would calculate out to about $5.6 million right now, but our actual reserve is $1.1 million of unobligated money. So that reserve is meant to deal with things like cash flow issues as we hold back on trying to get the optimal point of view for when we're issuing our general obligation bonds each year, but is also intended to deal with things like the emergencies that happen. So for example, at our police fire headquarters, there's an ongoing structural issue that we anticipate spending about $1.5 million that was not budgeted this year that will need to be addressed. And the city has been very fortunate in this year in that we have had some excess funds available in the general fund cash reserve. That's not always the case. So why does this matter? Because we have cash and we're still continuing to pay our bills. We haven't defaulted on anything. And actually, our finance group has opened a line of credit, as you may be aware, in order to cover any particular things. But it gets increasingly complex to manage. As we go year after year without issuing general obligation bonds, and now the staff is planning for the 2024 general obligation bond issue, it becomes more and more difficult when we don't know exactly what our funding is to continue to try to track it, roll it over. I have to make estimates at this point in time about what projects are not going to be completed by the end of 2023 and will have to be rolled over into 2024 and then roll over the funding accordingly. So it's really becomes more and more tricky in order to be able to really understand exactly what all of our commitments are. And not knowing exactly what those funding levels are, it puts us in a place where there are more unintended consequences. So in all honesty, one unintended consequence that happened this past year is that not all of the 2022 GO bonds were approved that were related to projects that hadn't gotten done. Some projects that we thought would be under a contract commitment by the end of December were not. They went under commitment in January and February. It's just like a 1-month delay. However, not all of those bonds were included in the actual budget document. And so as we awarded projects, we had to say, well, we're going to be using 2022 GO bonds if the city council approves those. The bonds haven't been sold yet, so it's just a paper description. But over time, having a lot of those types of little problems really adds up to the potential for more errors to occur. In addition, when we designate in our budget the 2022 GO bonds, and I'm just using this as an example, the city council adopts a budget. Practically speaking, there is a business unit that is opened that will contain the 2022 GO bonds, even though we haven't actually put any revenue into it. Expenses start going out of that as soon as the bond resolution is approved. And then we need to reimburse that business unit. If we are not going to use 2022 GO bonds, we can designate another funding source. But I actually still, even though this has come up a number of times and has been explained publicly, I still get questions like, why is it the 2022 GO bonds? We never sold 2022 GO bonds. How can you be spending those? It's like, I can because I have a business unit and a budget that says it's 2022 GO bonds until another funding source is designated. And so having this lack of clarity continues to cause issues with transparency with some of the members of the public. They don't necessarily understand. We continue to answer the same questions. It also pushes us into a place where someday we may all of a sudden have to sell a general obligation bond when it might not be as financially favorable because all of a sudden all of these commitments are coming due. So,
Chair Livingston, this is Leslie McMillan. These are really important issues that Laura's bringing up, and it's 6:30. It's the end. I think we've already passed a huge thing with the pensions. I think we really need some extra time to start fresh with this. Could we put this on the agenda for next time?
So this is just a discussion item for
yes,
this
we're not going to
evening.
approve anything.
And
It's
I think
just such a big
yeah,
thing.
it is. I agree, and so maybe we can get through a bit more. But I think ultimately what we need from Mr. Desai is a recommendation over the next month or so. How much of a bond is the city recommending that we issue, and why? And as we set ourselves up, because it has been 2 years, right? I think we've done the right thing. We had some excess cash. We've delayed issuing bonds in a scary market, right? Is it any better now? Well, it probably is the market that it is, right? So we've bought time. We need to know how much do we need to issue? Why is that the case? And what are our plans? So I think Member McMillan, I think it's good if we go through this for a bit more. It's not an action item for tonight, but it's setting things up very well. We really need to know what do we need to issue and why, and what's our plan in September, October to make a formal recommendation as to the bonds that we believe need to be issued. Because I agree, we've had cash, but it's caused some complexity. It's time to recognize this is the interest rate environment. Let's proceed and issue maybe the lowest level of bonds that we need, right? Because it's still a high interest rate environment, but we've done this for 2 years. We need to issue some bonds.
I'm sorry.
Yeah.
So you have predicted my next slide, which is that we were seeking guidance on what to do, and actually what we wanted to get to tonight was if there were specific information that we could bring back to you so that we could start to wrap up this financial plan as we move forward to planning next year's budget. So thank you. That is very helpful, actually, that clarity.
One item that would be helpful for me is I know we have that line of credit, so to kind of distinguish what is kind of short-term with money we might have coming in versus long-term needs that we would need a GO bond. Because I don't want to just issue bonds because we have projects and we might get money later, so.
So all of these projects need to be funded, and there is, in most cases, there's just, if we said GO bond, there is no other money coming. That GO bond, unless the city designates another funding source, like they just spontaneously decide to say, we are going to pay for this out of cash. This much will be cash. Otherwise, there's no other money coming. Capital projects, there are always new capital projects that are absorbing the excess funds of the city. So we have managed in cases like a situation where we've done projects at the Levy Center where the Levy Foundation has given the city money to do those projects. In most cases, the city fronts the money and the Levy Center pays us back at the end of the construction. That's true for almost all donations that we get of monies. That's what happened with Crown as well. The money was fronted by the city. We received donations back from Friends of Crown to help us pay for the costs as the project is completed. However, up until now, the cash balance in the Capital Improvement Fund has been covering those types of costs. What we're starting to run into the situation is we burned through that, and now we don't necessarily have that same ability. Okay, so that's challenge.
Sure. Yeah.
Oh, I'm sorry.
Councilmember Burns.
I just had a follow-up question to what we just heard about short-term projects and long-term projects. Are you thinking like short-term sidewalk replacement, long-term, animal shelter? Like I want to understand.
Like,
what
I
you meant
think
by
we were going to fix the fountain, but we might get money later. So
That
those
is a
kind of
very unique
things,
one-off,
I wouldn't
yes.
want us to put on the list for the GO bond. So those are the kind of things I just kind of wanted separated out.
And so what would you separate out? I just want to be clear, because I think you're saying something that is interesting to me that I want to think about more after this meeting.
Something that we may get reimbursed later, and we have this line of credit we could use for a year or two until we get reimbursed, then we're not locked into a bond paying interest on money that is going to come in. It may not be that much, but if we scrape it together, it may end up being a few $1 million, so.
Perfect, thank you.
So we can identify those types of costs, and the animal shelter would be another type of cost like that. So thank you for that clarification.
Chair.
Yes. Councilmember, was it Reed?
Yes,
All right.
thank you.
Don't say anything else.
Yeah, so I want to thank you, Laura. I want to focus this committee on what I don't think this committee should be thinking about any individual projects like the animal shelter or the civic center or anything like that, the police station. What I think this committee should do is essentially with CIP engage in the process we just engaged in with the pensions. That was a huge undertaking, and I think it's really setting us up in the right place. And I think we need to understand what all of our outstanding infrastructure liabilities are, the things that would cause us to issue new bonds, because quite frankly, I think I may have changed my opinion on this a bit. Given the outstanding liability that we have with infrastructure, we are going to, at some point, very soon have to issue some bonds to pay for this or find substantial new sources of revenue. And what I think we need to do is we need to get a grasp of what that number is. Similarly, as we did with pensions, determine what is a good time frame to pay this off. If we're thinking about the lead pipes, then we have a state mandate that we have to meet. If we're thinking about other, we set our own goal. And what would it take for us to fund? And then also, if you want to think about this like pensions, we know every year more infrastructure is going to fail. I think factor that in, and then determine what it's going to take to get us to wherever we want to be, whatever our version for this of 100% funding is, by a certain time frame, and work backwards and see, what numbers will we have to come up with for an annual expenditure toward this. And that's what I think this committee should focus on. And I think that would be really helpful for council if we did that.
Councilmember Kelly?
Thank you. Yeah, I'm looking at I think it's the quarterly report with the cash and investment position, and I see, is this accurate? We have about 64 million in cash at Byline. Is that correct? Mr. Desai? Okay. So, I think we always, and we've expressed this before in finance and budget, that, that, I don't know what that earns, or do we choose to put it in Byline because, well, at any rate, what is the approximate earnings on that cash balance?
We are earning the rate changes, but it's like close to 5% right now.
On the cash balance at Byline. Okay. And then the rest is, around 100 million that's invested. But I think generally speaking, we would prefer to use that cash for the most part, not touching our reserves, but the excess reserves, yes, but rather than issuing 20-year high-interest bonds. I think we've made that clear, that we always want to go there first.
Yeah, yes, you are looking at the one part, but we can't treat 100 million as a one part of cash, because if it's ARPA money there, if it's a TIF money, if it's special service area cash, if it's the water fund cash, yes. So you have to look for only funds like a CIP fund or general fund, human service fund, which are kind of fungible, where you can take the money from. But yeah, I cannot touch the other funds,
Right, but it is fungible to your point. So, if you have 64 million in cash, right? Are you saying you can't?
It depends on, so you have to look at the monthly financial and see the cash by each fund. That's more sense. That makes more sense than looking at, say, okay, we have 100 million in cash, because that 100 million could be divided over 30 different funds. And we have to see which fund has what money.
Chair, I have another quick question.
Sure.
I just want to know we do have a line of credit currently. Can you explain what that looks like?
So we have the line of credit right now. I think it's a $15 million. It's coming up for I think the renewal. I'll have to check with the byline. The only downside, like if you say, okay, right now, whether we have to make the decision, whether we issue the bond or use the line of credit. Line of credit rate would be around, I think, 6.5% right now, because typically they add, at least 100. The bond rate, I just got the numbers from our financial advisor about one of the city of Aurora issued the bonds last week, and the net interest cost came around 4% versus this. But again, yes, I think we'll touch on that. I think the committee member Rikers, that yes, what is our short-term needs versus that? We can even come up with a combination of things. Say, let's issue a $15-20 million GEO bonds and use the rest out of our temporary line of credit.
And we say renewal, does that mean that 6.5 may change when we renew?
It is tied to the Fed rate. So if it goes up, the rate goes up. If it goes down, it goes down.
It could go down, though, is my point.
What's
the
that?
6 or 6.5? that you mentioned from the line of credit, that number could go down when we renew.
Could go
right?
down, but I think the way the market is, and I think some of the members could talk to, it is like, they say it's like a little bit stubborn right now. I mean, last year, I would admit that I was thinking about, based on the reports we are getting from all the economists, that yes, we would have a normal rate by the mid-23. But we are pretty much there, and they still talk about one more rate increase before they start stabilizing or cutting the rate. So it is very uncertain, yeah.
And that's why I was saying, because you want to match the line of credit with short-term needs and the bonds for long-term, because it's better to pay a higher rate for 2 months versus paying the 4% for 12 months, so.
Okay, thank you.
So we also wanted to make the committee aware, as we've developed the 2024 CIP, there's been a number of issues that are becoming clear. There are specific challenges to this year's CIP. One is related to water main and lead service line replacements. I'm actually going to let our follow-on person talk about that particular challenge and skip it for now. Challenge 2, as we've been doing parks, we've generally been focusing on our worst parks, and those parks are bad enough that they basically have to just be wiped clean and redone from scratch because the infrastructure is so deteriorated. But a lot of questions rightfully have been coming up as we've gone through 2023 about why don't we just go in and just replace equipment? Why don't we go in and just fix problems rather than do these massively expensive whole park renovations? And this is really valid. It's a valid discussion item. So staff did a deep dive into how do we want to address parks. And essentially what we have is the city owns over 80 parks that they maintain. 11 of these parks are over 26 years old with no appreciable investment in the last 26 years. So we are going to call them legacy parks because we have to call them something, but they are unfortunately our legacy of underinvesting chronically in parks. Now, those are the parks that we're doing, and a single park might be $1 million, or if it's really big, like a $2 million project just to get this one park done. And when we look, because we have some more of these coming up on the CIP, when I go out to one of these parks and I look at, well, can we just get by with replacing playground equipment? You could accept that, and this is very typical at many of our parks, there are overhead power lines that run over the playground equipment. And legally, once we touch things, we have to fix that problem and bury the overhead power lines. There's a pathway that leads up to it that is so cracked and degraded that it no longer meets anything like ADA requirements. So now we're fixing a pathway. There is a shelter that hasn't had any investment in it. Elements have been removed, but basically it's verging on not structurally sound, so we have to address the shelter. The playground floods all the time. We need to also regrade the park or put in a drainage system. So you can see how those types of parks, those legacy parks, you really cannot go in and just fix a thing. You are forced into the situation. Now, we have a lot of parks. We have 69 other parks that are not legacy parks that we could go in and do that type of improvement. But the city isn't funding park improvements that way. We don't have a line item that we do every year for playground equipment replacement. We have a whole generation of parks behind our legacy parks that could turn into the next generation. But if we were to start doing these regular investments in the capital program, we could get into a situation over a period of time where we weren't being faced with these types of major improvements on the same scale that we have them now. And so the staff has looked at setting up a proposed capital improvement program that kind of does address those legacy parks, because we're removing playground equipment as we speak, but also look at, for the next generation, trying to get it so that we're regularly doing these kinds of capital improvements. But that requires that for a period of time, we are sort of double funding parks in order to get into a good place. So that is where, again, it would be very helpful if the committee were to make some recommendations or provide some guidance on what is an acceptable level of debt issuance to cover these types of expenditures, or are there alternate funding sources that we should be looking at in order to be able to fund that?
Councilmember Kelly, and I think we do just have a couple of minutes, and I know there was some water.
Okay, a quick comment. I think we have Bob, Councilmember Burns, and I think Leslie McMillan, you're the CIP subcommittee. Is that correct?
We need to revive it, honestly. But I will say I agree with what Councilmember Reed said. I think the comparison that he provided is a good one, and it may be a different amount of effort, but I do think one of my recommendations was going to be for some of these issues, especially these really big issues, as Leslie said, I think we do benefit from working on it together, collaboratively, in the same way we did the pensions. Yeah.
And I would love to be a part of that working group, if possible, or somehow, if someone isn't able to make it, I'd be happy to swap in.
Since we're short on time, facilities, same thing. We have 6 facilities. We have plans for 2 of them. We have 4 that are really on the horizon, and we've been working to pull together draft plans for these things. We're rolling those out as we've over the next few months as we do the budget, but same problem, same challenge.
Someone did ask a question on that page, and I kind of agree. Those are broad ranges, 35 to, is there a way we can get the detail or why there's such
Yes.
big ranges?
So the reason that they're big ranges, a couple reasons. One, we don't entirely know what we're doing. When we talk about something like the police fire headquarters or the civic center, we're in the middle of a process where the city council is going to be presented information over the next couple months, and we'll need to start making some choices. Are we renovating in place? Are we building a new facility? Those have different cost implications. In addition, construction inflation has been crazy, and I mean just crazy. And so in order for us to understand how much we're ultimately going to be spending, it depends a lot on when the decisions are made. If we delay a decision for 5 years, the cost is going to be dramatically different. But we've seen in the past times when numbers were floated without having a specific scope of work, or years before the work was done, and then people feeling somewhat betrayed, like the staff didn't stick to a budget, when actually the scope of what was built was wildly different than what was actually planned originally. So for that reason, we've kept the numbers really general, but we are we're having some staffing issues, in all honesty, that we're trying to churn through all of this information. And we don't expect that this committee would have a recommendation in a week, but these are long-term challenges that over the next several months, we need to come up with a plan that we could implement in the long term.
Councilmember Kelly.
So, for example, with regard to the parks maintenance and the work that needs to be done, is there any reason we just don't have an annual routine line item for maintenance of parks, as opposed to this park needs this, and is that something we'd consider adding to our?
I would certainly love to. I will tell you, 7 years ago, we were spending less than $1 million a year, something like $600,000 a year on parks in the capital improvement program. Now, a single park rehab is over $1 million just because of the cost. So there was never money in recent memory devoted to meet even just the annual equipment replacement, pathway resurfacing, lighting modernization, all of the things that you just have to do to keep it going, much less deal with these massive park rehabilitations.
Thank you. Yeah, it seems like it would be great if we could reestablish line items for maintenance, such as for parks and others, just regular annual, figuring out on average what we need to spend in our budget.
Thank you. So I don't want to beat this up. I will say that one thing we wanted to request is if the committee would be willing to meet in July again. I know there's no August meeting planned, but we'd really like to be able to provide you more information before this goes out to the general city council.
I think that's a good idea for whoever's available. Would be a good idea. And we can go over the water point then?
Yes.
Maybe the water points
So-
then. Well, if I could just say one, I think everything should be on the table here, right? And even if it's uncomfortable to talk about, and maybe we don't do it, but why do we have 80 parks, right? What should the footprint be of these facilities, right? One consolidated facility, multiple facilities that get fixed. We shouldn't be afraid to talk about anything as different options in how we're going to, maybe you have to rejigger how the city has been organized or what the footprint is. Now's the time, perfect time to rethink, okay, what should it be? What can we afford?
And what's the usage of some of these parks? If we're going to put $1 million in it, is it being used? If there's 1-2 blocks away?
Point of order. I just want to really refocus this committee. I think this committee should focus on the finances. I don't think this committee should get into, I think we should understand the finances so we can send that over to the Parks and Rec Board or send that over to the City Council so those boards who are focused on those issues can use this information that this committee provides to make an informed decision. I don't think this committee should be getting into the work of deciding whether or not a facility is proper or not. And that's why I certainly am willing to come back to a future meeting if we need another July meeting.
Good evening, Chair and members of the committee. Dave Stoneback, Deputy City Manager. I'm not actually doing the water fund presentation. That would be Darrell King. Okay. But is the committee interested in seeing that yet tonight, or do you have a hard stop?
How much longer do we have the room?
Preservation Commission meeting starts at 7 in this room, so.
Okay. So we have a hard stop. So this presentation that we have is now on the Finance and Budget Committee's website, so you can click on it, view it there. There is an accompanying memo to that. As staff, I would ask that you might consider meeting 2 weeks from now again, and we can, Ms. Biggs had several factors up on that last slide. We could provide more information about the bond issues, what we think we need short-term, long-term. We could talk more about the parks and facilities, the two big issues, and we could also talk about the water fund. The quick snapshot on the water fund is that we have an aging infrastructure with over 100-year-old water mains. We have some, right now, we have 1.5 miles of water main over 120 years old, which, life expectancy of a water main is 100, and stretch it to 120. And if we keep going just at the pace we're going, in 2042 we'll wind up with 27 miles over 120 years old. So staff did a whole calculation indicating that we should be increasing our annual replacement of water main to 3.2 miles. Of course, that means just more expense. And then the state does have a law out that requires us to have an immediate impact on how much it costs. You have to replace lead service lines that are connected to the water mains you're replacing, and you have to repair one that is broken. So that was an immediate cost that happened right now, but then starting in 2027, we have to replace over 11,000 lead service lines within 20 years. And that means doing approximately 500 a year, and that's a big cost too. So we have a model that we use, and we've been using it since 2009, and staff is still working on this, but we're looking at almost 16% water rate increases for the next 6 years, 13% water rate increases for the next 6 years. And we'd like to show you that and demonstrate it to you, bring the model in and things like that. So,
Councilmember Kelly White first, and then Councilmember Burns, and I think we are.
Okay, just a couple of quick questions. The 13% increase, is that for also the folks that we service outside of Evanston? Is that across the board or just Evanstonians?
it's just Evanstonians, because if you look at the slide, you'll see that the water plant, and we had one massive fund worksheet, and we split it between water plant, and distribution system. The water plant is doing well because of our wholesale water customers. The distribution system, the 18-inch and smaller pipes that serve water to the Evanston residents only, is what's 100 years old and needs to be replaced. And every lead service line is only used in Evanston, so we can't charge our wholesale water customers.
And then my other question is, thank you. It says here in the memo that the goal is to maintain a minimum of cash balance of $4 million. Is that, I see in our fund reserve policy that the water fund keeps a 16.6 reserve. Does that $4 million part of that 16.6 reserve?
It's more than the 16.6%.
Above and beyond?
Right, because in our study in 2009, the consultant that helped us with that said we should have 25% of our operating costs. We should have $1 million set aside because of fluctual revenue income, mostly for Evanston residents that they pay late. We may not get the money right away. We had an incident where one of our water contracts expired and our purchaser wasn't paying us as they should. So that's why we'd like that reserve, and then it's $1 million that we put aside on capital for the water plant. If a major pump over there failed, we would have to get it replaced right away, and so we keep that reserve funding available in the water fund to be able to do that
So
type of an emergency.
do we need to then revise that, that 16.6, it looks like?
That's
'Cause
correct.
this is-
16.6 is a standard used for all the funds throughout the city.
Well, some have 25%.
Right, okay. For
They
the water
vary.
fund, we recommend higher, and we actually split $4 million between $3 million for the plant and $1 million for the water main. So if you look at all that, we'll be glad to present it, and I'm just trying to give this quick snapshot so we can get done by 7 o'clock.
Yeah. And Councilmember Burns, I think that's last.
Yeah, I just wanted to say, going back to the previous conversation, that I would like to see or have a conversation about how we might be able to. I think part of what Laura said will lead to us not being able to invest in certain parks, which could mean that if the equipment is left alone, we could be leaving it in a dangerous state that could injure people, which then leads to the question of, do we just need to remove it altogether? And so I do think the question of, I would like to understand what our goals are in terms of how close we want parks near where people live. I do think this is important because, similar to the pension conversation, we have to understand what our obligation is, and the obligation is just it's up to council, and we could have council discuss it first. But I think we have enough council member representation on this committee to where I do think it's something that we need to and should take up as part of these discussions, because we have to understand what the obligation is, and that's based on what our goals are. How many parks are enough? How many parks do we need to satisfy whatever goals we have? So I didn't want that to get lost, because at the next meeting I would like to even see on a map, I guess, just based on those goals, where are areas where we have kind of full coverage based on those goals in terms of parks near residential areas. Where are we, where are we covered more than we, need to be, or in terms of when you look at our goal. So I would like that information, because I think for me that's what will help me move the discussion along. So I'd like to see that, hopefully, if we can get it at the next meeting. I don't know if we set that meeting also. That was something else I wanted to bring up. Do we want to do that before we adjourn, or do we want to do that through email?
I personally have a problem with the 25th, which is in 2 weeks, but if it works for everybody else, then I just might not be able to be here. Someone else could share it. At 24th, do you have a council meeting?
Yes.
Yeah, so that's hard. That week is,
27.
no, I'm out that week. So unless we did August 1st, I know we said not doing it in August, but what, August 1? I think we're going to need to correspond and say what date works. Okay? All right. So, good, we'll figure out, but right, maybe over the next few days we can determine what works. And it might have to be the 25th, and I just can't be here. So, all right, very good. So we're adjourned.